Alright, it is time for step 2 of building our budget, and that is withholding for taxes and payroll taxes. Now, to be quite honest, sticking this into our budget is going to be pretty simple, and we'll talk about that at the end. So to make things a little more interesting, I figured we'd talk a little bit about taxes in general and about a little bit of the history, and to get a bigger overview of what exactly is going on with these areas in our budget. So let's take a brief look at taxes. So this is going to include federal income taxes, payroll taxes, which is Social Security and Medicare, state income taxes, and then for some of us, local income taxes. Now there may be a couple of other things thrown in there depending on what state or what city or what county you live in. Some of them have extra stuff that we'll talk about here in a little bit. But for the most part, it's these big four that we're interested in. Now, to put this in perspective, in the United States, our gross domestic product, which is the sum of all goods and services sold in 2016, is about $18 trillion, little over 18 trillion. That's a lot of zeros, so I put it there in the side in parentheses. And to look a little closer, our federal budget is about $3.5 trillion. Now, if you take that $3.5 trillion and you divide it by the total number of men, women, and children in the United States, which is somewhere around 330, 340 million, you come up with a number of about $11,000 per man, woman, and child that the federal government will spend in 2017. And if we take a look at this nice chart here, we look at kind of how taxes have changed over the years. So in the beginning, the left side of this chart is year 1900. The right side is 2016. And you see that taxes really didn't exist for a while there. Then when federal income taxes were introduced, they were relatively small. And it wasn't until about 1943 that they started to jump up. Now, to put this into perspective, in 1943, about 75 years ago, only about 4% of people in the U.S. even paid federal income taxes. So this was a very small portion of the population that even had to bother with this. And you'll notice that also somewhere in there in the 1930s is when payroll taxes started. State income taxes started somewhere in the 20s and have slowly grown from there. And then you got local taxes that started somewhere in the 60s and 70s, and they've stayed relatively small in the big picture. But if you live in one of these towns or cities that charges another local income tax, they probably don't seem so small to you. So let's take a quick look. Here's a little chart of income taxes in different states. This is the highest tax rate in each state. There are generally a number of levels. Not going to get too deep into that, but really this is just for perspective of whatever state you live in and how it compares to others. You see that there are a lot of states that don't have any state income tax. And then you've got some like California that has a top rate of over 13%. So it varies wildly. Now these states that don't have an income tax probably make up a lot of that in other taxes like property tax or sales tax or many other different kinds. But nevertheless, this chart is just to give you an idea and a perspective of how you may compare to other places around the country. So the last part of that equation, as far as income taxes go, is local income taxes. Here in Kansas City, where I live, if I lived in Kansas City, Missouri, I'd have an additional 1% on top of what is taxed for my federal and state. I'd have an additional 1% added on top of that to pay to the city. If you live in Washington, D.C., you're talking anywhere from 4 to 8.5. Baltimore, about 3%. There are all kinds of counties that charge an additional income tax to help pay for schools or to help pay for whatever it may be that they want to pay for. So you could have a lot of different types of local income taxes or taxes in general levied, just depending on where you live. So when it comes to budgeting, what we're really talking about is withholding. This is what we need to account for in our budget. So what is it? Well, withholding is a portion of your earnings that are taken out of your paycheck before you even see it, and they're taken out according to the estimated taxes that you're going to owe. So let's say you have $1,000 withheld in federal tax. So at the end of the year, you'll file your tax return, and you get to see if you still owe more on top of that $1,000, or if maybe you get a little bit of what you earned back. Generally, withholding applies to federal and state income taxes only. Withholding is really a term that is all about kind of a placeholder. Each paycheck, a little bit's being taken out, and at the end of the year, you file your taxes to see where you stand, if you owe more, if you get a little bit back. Now, there are other taxes taken out of your paycheck as well, not necessarily withheld, but nevertheless they're taken out of your paycheck. So FICA is the Federal Insurance Contributions Act. It was passed way back in the 30s, and it really consists of two different programs. You've got Social Security and you've got Medicare. If you want to learn a little more about those programs, do a little research on Google. It's very easy to learn about what they are. For the purposes here, we're really just talking about what the taxes are. So in 1937, Social Security was passed, and it began as a 2% tax. 1% of it came, quote unquote, from the employee, and 1% came from the employer, for a total of 2%. Now, it depends on your perspective what you would say this is. Really, you're talking 2% total. You could make an argument that it's 2% and all of it's coming from the employee, because if the tax didn't exist, the employer would be able to pay the employee a little bit more. You could also make the argument that the whole 2% comes from the employer, because it's their money to start with. No matter what your perspective is on it, the fact is it's a 2% total tax. But around 1949, they had to increase it to keep up with the payments that were being made, and today we're sitting at about 12.4%. There was a brief stint there in 2012 where the quote-unquote employee portion dropped a little bit, but it jumped right back up, and we're back to the 12.4 total. Likewise, the Medicare program began back in the 60s. It started as, a pretty small tax, less than 1% total. But by the time you get to 2017, it's now at a 2.9% of your total income. So when you pay this tax, this is not really withholding. It's taken out of your paycheck right there at the beginning. You never really see this money. But it's not something that you file later on and get some back or pay some in. This is money that's just gone. It's gone forever until you end up taking advantage of one of the programs that it funds later in life. Okay, so we've got an idea of what these taxes are now. Let's take a look at an example pay stub. This is a sample that I just took off the internet. Looks like this person lives in California, makes a real nice living, $112,500 a year, $2,500, and it's each week. So the first thing I want to point out is why I know it's each week, and that's this area right here. So this pay period. We're looking at October 31st to November 6th, so we know that it's a week. So we know this person is paid weekly, and so we know that we're going to have 52 times a year on our budget. And let's take a look at each of those line items that we just talked about, that we just reviewed. So here, the first line, we've got the Medicare tax, FICA Med, at $36.25 a paycheck, which if you do the math there, it'll be the 1.45% we talked about before. You've got FICA SS, so FICA Social Security, $155 a paycheck. You've got federal tax withholding of $559.18. You've got California state tax of $183.76, and then you got one of these extra local taxes. In this case, this stands for, I believe, state disability insurance. So for whatever reason in this state, they charge $25 a paycheck for disability insurance. You could very well find many other taxes there that we talked about, either a city tax, a county tax, many other things that could be here. But for this example, it's the state disability insurance. So they actually do the totals for you. You've got the $2,500 that this person earned that pay period. You've got all the deductions of the different taxes, $959. and you've got the total that is you're actually going to get in your paycheck, $1,540. So let's translate this to our budget, and it's going to look a little something like this. You can call it whatever you want. If you want to put exactly what's on your pay stub so that you're sure to know what it corresponds to, you could just write Fed tax instead of federal tax. But nevertheless, we just simply translated each one of these to our budget. And then you see the total percentage down here. So in this example, the total taxes that are going to be paid or at least withheld in this example paycheck, it represents about 38% of the total income that this individual earned, at least on this paycheck. Now this example is pretty simple. This would be more like a salary example. But nevertheless, you'll do the same thing to figure your tax withholding and to put it on your budget that you're working on. If you're paid hourly, for example, you want to average many paychecks to make sure you're getting a good amount, or even many years if you can. If you've been at the job that long, where you can take a number of years and you can average them together for that federal and state tax, that's a good thing to do, because that's something that changes a fair amount. Your withholding depends on many factors. If you work 10 hours one week, then your withholding as a percentage is going to be lower than if you worked 50 hours that week. Obviously the number of dollars will be less because you earned less, but even as a percentage it will probably be less. Same thing goes with both of those withholdings of federal and state tax. Now your FICA and your Social Security, your Medicare and your Social Security, those are going to stay pretty consistent. That's just based on what you earn. And for those of you who earn tips and think that you get out of those, it's not the case. That is reportable income that the FICA taxes are applied to. So grab your pay stubs, do a little bit of averaging if your income is not just a straight simple salary. Get that in your budget, and when you do, you're done with this step and it's ready to move on to the next one. We'll see you there.